Okay, good morning. This is Simon with Trade and Perform Coaching, doing the market preview for the 27th of March. Just really quick, I got to throw this up there. So just if you want to pause it, read this. Past performance is not indicative of future results. This is for educational purposes only, and you can lose your backside trading futures, particularly without a process and a plan. It is very hard to stay consistent without a process and a plan, and there's a lot of risk involved in trading futures, particularly if you're an emotional person, right? So my suggestion is get a process, stay on process. That would be my 2 cents about that. So anyways, let's get fired up real quick. So number one, let's go look at the profiles, and then we'll work from there. And let us jump into ES. So first, overnight, if we take a look real quick at ES overnight, I'll pull that up. That should be a 24-hour chart. Close enough, right? And you can see they try to bury it. Those are the correct support resistance areas. So remember, in the chart, the blue areas are support and resistance, right? So this is what's posted to the room in terms of the chart. Let me grab ES real quick, which is over on another screen. Okay, that's the overnight support resistance. That was pretty much yesterday's low and high. This is that blue area that we're dealing with actually right now. And if you look how that translates, so this is 5-minute bar, right? So you can see we roll down. Actually, this is not overnight, so let's do it this way here. It's easier for sometimes if people see it on a 24-hour chart. So we'll do it that way. Oops. Let's fix that. There we go. Okay. And that should pop up, or it'll just freeze here for a second because that's how it works sometimes. Okay, so you'll see that it's the same chart. We roll down overnight, shorts bury themselves. You can see this inverse head and shoulders pattern, and the market then turned around and has pushed back up. That is pretty damn normal. That's pretty normal process, right? We try to squeeze underneath here. This was an old swing. This is an old swing high that we pushed back up to. Try to trade underneath. You can see the consolidation pattern. Too many shorts piled in, thinking we're going to zero, and they push back up. And then the other thing that you're looking at here is when you push this, right? So the 50-60 is really important to understanding how the market works. You see we pushed right into the 50-60 retrace from the 1 o'clock swing low and found responsive buyers, and they pushed in. So what we do in the room is we translate that into, if you look at that exact same chart in the overnight session, right? So you have to have both sides of the perspective, right? Hold on I want to make sure this is carrying over. Hold on 1 second. This is chart number 4. I just want to make sure that 5-minute chart is correct. Chart settings, and settings. There we go. Yeah, we're all good. So when you look at this chart, right, see how all the pieces fit in with one another? You can see the 50-60 retraces over here. There's prior day's low, prior day's high, right, from the open. And you can see we pushed. We did the 50-60 retrace overnight. There's that same push, but this is on a 1-range bar, right? So the time frame's a little bit different. And if you look in that process, right, what's set up along? So what we're looking for is a fractal trendline break, and you had two versions of a fractal trendline break. That was one, and then you had the more advanced one, which I don't like using it like this, but I do like this. And you have it like this right here, more or less. And then what you want to do is get above one of these fractals or above one of these 3 up, 3 down, right? So if we had been trading at 6 in the morning, right, we had rolled down. The roll was from, look at the rotation size and look where we were in the market. We rolled down from 28.32 down to 28.12. That's a 20-point rotation, right? ES rolls in 10 and 20-point rotations. They tried to push to the downside. Look at the delta divergence into the lows, right? And so then you're looking for the last piece, which is, well, how do I figure out the reversal? So see this fractal up, fractal down, and they're on algo speed bars. See the bright blue and bright red? Those are algo speed bars. You have little triangles on top and on bottom. We want to get above those or below those. So if you look, this is the first speed bar we got above, right? You can see that they were pushing down. The red speed bars indicate that people are making significant effort to push lower. You can see all the sell effort disappeared here. We closed above, right? So what's the process? Entry, 50, 60 back, okay? Stop below, and then push. Number one, see that blue zone right there? So you got to combine, and it's a great example, so you can combine all three pieces at once, right? This is resistance. It can be traded through. It's a light blue zone. So what did they do? They rolled up, resistance, resistance, traded through, right? And the reason why you can't lean on it blindly is because you can end up with a move just like this where you end up with a stop, which is why you need a pattern for entry on the process and a pattern and then a process for exit as well. For example, if I closed under these two fractals right here, I'd want to be short. I don't short into the open, but that's what I'd want to do. I'd want to be short underneath that for a roll back down. So you had three combinations of things going on here. This is the bigger picture 50-60 from the 1 o'clock swing low yesterday. This is the trigger long. This is the minor 50-60 retrace out of that setup. This is the push, right? And then that was a 20-point rotation, 10-point, 10-point, back to resistance, 50-60 back, and push. And if you look at the bigger picture from London Open, right, which was 3 a.m. actually, but we'll go with it, which is right here. You go down there, and we end up trading in fractals of 50 retraces, right? And they make good targets and they make good support areas. You just have to figure out how to get your entry and exit out of that trade location, right? So, and just to make sure audio's good. Yes, it is. Okay, so that's a yes. I want to look at the profile real quick on that to help everyone out. The profile was ugly on ES. And then we'll go do NQ, then we'll do CL. Oil inventories today, by the way. Okay, so let's erase all these lines. Okay, so what have we had happen so far? Number one, we are in a raging uptrend. Has not been broken, right? We have not even made it back to the halfway point from that, and we're nowhere close to doing it. It's not even realistic for today, right? We did make it halfway back from here to here. You can see the 50-60 retrace. Again, that's important, right? The first clue that we might roll lower would be getting underneath and holding underneath 27, 79, 75. That hasn't happened yet. See how non-definitive yesterday's profile is? The key resistance is all the way up here, actually, like that, on top, right? Those are unfair prices. It's a logical place to get rejection out of if the setup occurs, right? So you can see yesterday we pushed up in unfair prices over here. There's unfair prices here. If we clear this location, in general, this is your clear target up above, right? That 2860, it's a no-brainer. And then that's the extended target. So if you look at the ranges that are possible, an extreme range would be 50 points. We closed yesterday at roughly 28.21. So that would put you at 28.71 on top, right? The range is important. That would be an extreme move, right? So you put color red. You take 28.21, you subtract 50, that puts you at roughly 27.70, right? That would be an extreme move, 50 points, right? And then you look in there, and this is pretty much the area you're going to focus on unless something dramatic happens intraday to push us lower. So when you look within those ranges, what's logical? There's unfair pricing down here near 27.84, and that'd be a retest of this week's low. I'd expect responsive buyers there the first time. And then if you push back up towards the other end of that extreme, we don't have unfair pricing here. As a matter of fact, we have a poor high, but it is on a stretch, right? From 28.21, yesterday's close-ish, right, up to 28.65 would be 40 points. I'd expect rejection from here prior. There's not a lot of resistance above 28.32. So we're either going to hold 28.32 as resistance and roll back down and test this low. If we consolidate above, there's not much holding us back from trading up towards 28.58. It's just a question of energy and the ability to push up, right? So within that, on the downside, what's likely to give us a response? If we break the swing low, this is a naked volume point of control that has been in a naked TPO point of control, which is sitting roughly 27.85 to 27.79. I expect responsive buyers. Therefore, with that conclusion, I expect resistance here, support here, and then extended resistance up into that area. Those are my three key areas. And then you have an untested volume point of control, which will probably get a response because there's not a driver at 2803 to 2806. And I believe if we look at the overnight low, did we tag it or not? We did not. We got to 2812, which was simply yesterday's value area low. So this remains to be tested. And all the market's doing, if you look at a profile, is going up and down, testing untested areas, right? Unless new fundamental information comes in, and then the market starts to search for sellers or buyers as it processes that new information, right? But with the absence of information the market considers critical, it's just going to simply go and test untested areas or poorly auctioned areas and respond off of them, which is why this morning when I got to NQ, right, if you look at the NQ chart from overnight, and I'll do the same thing I did as we switch gears. Again, I don't trade the first half hour, guys, so I'm not in a rush. But if you look, this evening session, how many days we have loaded? That's fine. I'll just take a second to load that chart. So if you look at the evening session, this was support, right? You can see that's a big fat rotation lower, pulling a bigger picture, right? Again, what were traders looking for? If you pull from, using a combination in this case, there's the 1420 swing low. There's your 50-60 response. You'll notice they were unable to close behind the 62 retrace there into an anomaly, hence the yellow zone, and respond back to the upside. And I did write, because I was here when it happened, and I said, right before I left, I said, so I posted NQ for Wednesday. I thought I did. Let me see if I posted it in. Maybe I thought I said it and I didn't say it. Oh, there we go. Right there, 6:17 a.m. That puts us right here. And I said, NQ is sitting in support right now, and we have had a nice roll down overnight. Inventory is short in both markets, meaning ES and NQ. I'd expect those shorts to get shaken down between now and 9 a.m. That is your shakedown. Too many shorts in the hole, people trying to press, and they got smoked back to the upside, right? So what we're trying to do is combine entry, exit, stop. And so if you take that, right, you take that same chart, and now you go look at your intraday move, right? So this is not that hard, right? You're just putting together pieces. And so it works the same way intraday, right? So if you look, what would be our key for entry? So there's your fractal trend line, right? You can draw it right across like that, right? Notice that we have a lack of speed bars to the downside except for this one. You get these speed bars down. So this situation here can be frustrating, right? And you have to make a decision. So I want to talk about it for a second because I'm not trading the first half hour. You're in support. You can see consistent response out of the support. How else would you figure out to get long out of this area, right? Well, what you see here is we finally triggered above a fractal with a speed bar right here. It's too far to take the stop, right? You kind of get, if you use this stop, it's too far off the low. Why? So you got to make an adjustment there, because if you look at this, right, this is your 50-60 back. So the adjustment here, right, is that you wait for this pushback into the 50-60 retrace and you use this bar as your stop. Why is that important? If this were outer space, meaning there's no support there one way or the other, it's just kind of, I think it'll respond, then you can use the fractals and you just have to use a tight stop to make it work. Meaning once you closed underneath this fractal, the speed bar fractal right here, it did set up short to the downside. The problem is you're stretched so far down and into a key support area, you really don't want to be short. You want to look for an excuse. And for whatever reason, we just haven't been setting up very nicely long yesterday or overnight, quite frankly. The fractals just didn't set up, right? In that case, you have to audible, right? The setup doesn't always work perfectly. And if you look at that setup, when we rolled back into that 50-60, that's 50-60 back. This is 3 down, triggered right here. The algo's doing the work for us. This is the close back above. So you could either take in the 50-60 back flat out, waited for the close above, which occurred right here, right? With a stop right here. You don't want it to get underneath this 3 down, right? Or for me, the easier way would have been to look and go, they're buried overnight. They've pressed. You see that this series of big delta presses, they couldn't break. And then on the retest into that zone, there's just no delta. These are delta waves. There's just no pressure on the downside. And right when you look back to the left, you're like, they've already had the roll, 74.05 to 73.60. It's almost 50 points. And we're in a bull market. You'd expect a response. Therefore, right, when you look at all that, you go, okay, they're probably going to press out. And you make your best educated guess. And then you see your biggest buy wave right there. And we followed through. And that is what you end up with when you get too many shorts. By the way, that same process, if you look yesterday afternoon, occurred late in the day. Hold on one second. Tuesday let's get back a little bit. Okay. So I was in the room yesterday and I said, right, shorts are burying themselves again. And the frustration was I couldn't get a fractal setup. Again, you'll see your 3 down right here as they were pushing down into this location. And you just got to go. It's a bull market. These guys trying to get a close on the low at the end of the day are going to bury themselves. And you end up with, this is a huge rotation here. I did a 73.45 up to 73. That's already Asia. But this is the close, 73.77. That's a beautiful long side trade. If you can set it up, I don't trade the last hour, but that was a good setup. And you did have a fractal trend line break on this push down, right? So that's NQ. NQ did not set up very well. I'm going to cover CL, and then I have one last piece to cover before we get into the day. Let me go to the profile real quick on this. Let me wrong screen. Go back to your right screen. There you go. And then let's go grab the NQ profile, which is right here. Okay. And if you look at your NQ profile, again, I don't trade the first half hour. The first half hour is important to you. You got to go and do what you got to do, right? So, number one, let's get my pointer. All these lines. There we go. Okay. A, it's an ugly profile. That profile, that whole blue area, is easily traded through. See how undefined it is all the way through? Good profiles have sharp points. See how you get a response out of that, right? They're easy to find location in. Okay. So when we look up and down, the first question we're asking is, well, what does the market need to fix? There's a untested volume point of control up here. It's okay resistance. It's not great. It probably works because there's an anomaly associated with it that's pretty good, right? Up on top, and it wants to be tested. This is a poor high. See how flat that is on top? It's not pointy. Here, I'll spread it out so you can see it. See how it's all the way across? That's a poor high. If it gets tested, meaning we get past this anomaly, expect this to get broken until we get excess on top. Doesn't have to. It's just not a great place to fade a trade. Every retail trader will be looking for that gap fill. That's a poor high. They get broken. And I try not to trade where other retail traders are trading, so I ignore gap fills from settle prices, right? So if you look, this profile kind of needs to be repaired. It's non-definitive. This is where we came out of last night. That was the best anomaly I saw there. I'd expect a response. Notice underneath, we've already covered the volume point of control and TPO point of control from the 25th, and we've covered the volume point of control and TPO point of control from the 22nd. All that leaves is the 75.20 on top, right? Or all these areas below, I'm pointing to these, that need to get tested and or repaired, right? So that brings up roughly 72.82, 72.38, and then 71.84 to 71.74. So what's realistic? We do the same thing. 100 up and down on NQ, clearly we did more than that the other day, is realistic for a stretch. You look at our close was 73.77. So 74.77 puts you up 100. That's right here, right? That's a stretch. And we've been able to stretch up 120 to 150 points. So that puts this area as a prime area for potential resistance somewhere in there. You take that same area, that 73.81 from yesterday, you subtract 100, that brings up 72.81. That puts you right into that naked volume point of control. I'd expect a response from there or any of these key areas below. All of this is high odds location of getting a turn. You just need to look and figure out the setup that you're looking for on a smaller range. So for those who are new, I'm trading a lot of leverage. I'm trying to get very specific with my entries and exits. If you're trading less leverage, the less specific you have to be, right? Because the stops don't hurt you, okay? But I'm trading a lot of leverage. Everything kind of has to line up for me perfectly in order to take the trade, because the stops just bother me too much. That's me personally. I don't like taking stops. I actually hate it. Even I hate trading flat, quite frankly. I'd rather not be here if I'm going to trade flat. So it annoys me, and it's always a warning sign when I'm not nailing entries correctly or I'm getting a lot of stops, right? That's a warning sign for me that I'm doing something wrong, and I'm either not fit mentally, physically, or emotionally to be trading, and I need to go check up on what I'm doing and how I'm doing it so I can maintain my balance of what I'm looking for, because really all you need is 1 or 2 good trades to make it in this business, right? So that's NQ. Let's go do CL real quick. And CL has inventory today. It can make big moves on inventory. The pattern more recently has not been that. The pattern has been to have very low volatility, then trend day up right after the number. However, here's what happens to traders who trade that. They go, oh, look, there's no risk in oil inventory. I can trade it. And then they get whacked with a 100-point whipsaw within a minute or two of the number. And they go, what happened? I just lost my account. Well, that's what happened. You're swimming with sharks. If you want to trade it, be my guest. It's not my cup of tea. I won't trade it. I don't trade it. I'll wait 15 to 30 minutes at minimum, sometimes an hour, sometimes not at all if it's too wild, right? Again, the pattern has been pretty quiet. I believe this was last Wednesday. Let's go make sure that the 20th was last Wednesday, and you can see that it just busted out into a trend day up after the number. We're in a bull market. It could repeat this pattern. I don't trust it, so I can't trade it, right? I'm not going to just guess that it's going to trend day up. And I need an entry. I thought the best entry on that day was on this pullback here. And actually what happened was news came out, and it gave an entry right there for the push up into the close. This is U.S. session only, right? So if you look at yesterday's profile, we came down into support over in the U.S. session. That support right there, we held, right? Learn volume profile in TPO. It makes figuring out the chart easier. This is a double top. It was also a former swing high right here. That obviously, if that gets broken, would be bullish. It would also set up a potential trap back in just above 60.40, right? The clear target above is at 61 and then 62.20. Both of those are achievable. This is 200 ticks away, and you can have a 200 tick up day. Also achievable, right? Also achievable today is this swing low and this TPO point of control. Why? This 58.20, it's another 200 ticks away. And if things get really ugly, 57.40 to 57.62 are achievable as well. You can see we're in a balance area. This is building energy, and it's building energy in 2 ways. We're just trading sideways, and they're going to try and resolve this area, this whole block from 60.40 to 58.60, right? We'll just stay here till we build enough energy to move, kind of like over here. And then it'll make usually we'll make a vertical move either up or down. Obviously, we're trending up, so the odds favor the up, but don't be shocked, right? If you look at the last swing low, which was over here on March 8th, right? Very simply, here to here. This is your 50-60 back. It's cluttered with TPO and points of control. I expect a response out of that 57.20. There's a top of an open window right here. So I'm marking them down because the market gets moving fast down here. 56.58. That's Dalton's gap fill at 56.44. And about 56.50 is the mid of the half gap, and I would expect a response there. So I'm giving you the levels, right? And then up above, all these levels are achievable here, here, and even 64.80 if somehow we had an enormous drawdown would be doable. But your clear target, if I was looking at the market and given the trend that it's going, I would say 62.27 is a clear target to the upside. I just don't know the path that it'll follow to get there. And I don't need to know the path because I'm looking for specific entries and exits. I'm trading CL pretty well. I had a high win rate. I did not trade NQ very well, really the last 3 days. And and I want to discuss that for a second. Two things I want to discuss now that I'm moving on. I don't have anything else to say about the chart. I've posted my levels, and I'll start making trading decisions after the number comes out and I've seen what they want to do. And the no-brainer guess is what they want to do. Let's move this over here. What they want to do is go to that 62 is the no-brainer thought process. If you said it, you'd probably be right. I just don't know how they're going to do it, and I don't guess, nor do I trade it beforehand. So this is totally off topic. Yesterday, this has to do with trade management and risk management. This has to do with everyone in the room. When I coach someone one-on-one, right, the first thing I stress, you have to have a written trade plan. Number two, you have to know how many contracts you can trade relative to your account size. There are people in here in the room that can trade 20, 30, 40, 50 contracts, right? There are people in the room who can only trade one contract, right? That means you have to adjust to your risk tolerance, right? And your ability to lose money. So that is different than your financial ability to lose money. I want to talk about this for just a second, okay? If you have $100,000 account and you lose $1,000, that would be no big deal. As a matter of fact, to me, if I had a $100,000 account and I lost $5,000 intraday, it would not bother me. I wouldn't even blink, right? Because I know I can recover that. Doesn't bother me. I don't want to do it, but it would not bother me. There's other people in this room that could have $1 million account, and if they drew down $500, it would emotionally rack them, right? For whatever reason, the reason doesn't matter. It just would. Wherever you are on that spectrum, Simon down 5% intraday, who cares, right? Or client X down $500 on $1 million account, freaking out or anxious or nervous or upset, right? You got to know who you are, right, in order to be able to take that trade and manage it properly. Number two, if you're let's say I'm a 10 contract trader and you're a 4 contract trader, right? And you've already gone half, meaning usually I enter at the entry point on the 50-60 back, right? And if you've already entered half, and then I say I'll add one more time at this location for whatever reason, right? You have to look at your account and go, I have 4 contracts. I'm in 4 contracts. I can't go to a 5th contract because I endanger myself emotionally or psychologically if the trade rolls against me, right? Number two, and I'm going to use the CL chart to demonstrate this. And again, I hammer it over and over with every one of my coaching clients. I don't care what the size of your account is. Let's see. Let's get out of this for a second. NQ, they ran the shorts, then they ran the longs. Pretty funny, huh? Let's get over here and go to NQ from yesterday. You guys correct me if I'm wrong on my entries, but I think I've got these right. So yesterday, this was, I'm pretty damn sure I was long right here at 60.02 or 60.05, right? And as a matter of fact, I wrote it down so I can go look, but I think it was 60.02 I posted in the room. Let's just, for sake of example, let's just say I entered right here at 60.02. Okay, I'm pointing right here. Triggered long, thought the trade was good, that we were going to push for whatever reason, right? And I go, my scale is 60.12, right? That gives me 10 cents. So you have to make a decision at this point. I'm going over it slowly so everyone understands, right? If I go, hey, I think CL can push to 61 today, right? I'm still scaling my initial risk at 60.10. Why? If I picked up whatever, 10 contracts, let's say, and I scale 5 of them at 60.10, that moves my average back. So my stop would be sitting right here roughly, right? 59.84 or 59.83. So if I picked up 60.02, I scale for 10 cents half. That moves my stop from 60.02 back down to 59.92. My stop is now manageable. If I'm totally wrong on my read, the stop is manageable. And if I get stopped, it's no big deal. And I get the chance to swing. If you really want to push it, you just move your stop to break even at that point and hope it doesn't come back, which happens a lot on CL, right? I want to be clear so there's no mistaking. If you don't scale, or if I don't scale over here and I'm already full size at this point and I go, and my next ad, remember if I entered here, my next ad was back here at 59.95, right? If I did not scale here after I got my 10-cent push, I am not adding here at this point. Let's say I'm already full size. I do not exceed my full size. The hope was I'd get an entry here, quick backside test, and push. That's what I was hoping for. I'm not going to add because if I'm already full size and I add again, this is my stop. And the market, for whatever reason yesterday, was funky. This usually doesn't happen, but it did yesterday where they dinged it just underneath, right? And then pushed. It actually gave another long setup. We were long again right here on that same trade and got this push. Again, you have to scale. What I want to talk about what interferes with that. People look at the trade and they go, well, if Simon said we could go to 61, why am I selling 60.10 or 60.15 or 60.20 even when it's go to 61? I don't know that it's going to 61. I'm simply looking at the chart going, that's resistance up above. I'm not sure the path that it'll take to get there. And I'm kind of crossing my fingers that I've gotten my risk off and I'm going to let my trailer go. Sometimes I don't let my trailer go at all. Hold on a second. Let me make sure everyone's muted here real quick. Sorry, guys. I forgot to mute out in the room. I'll take care of it. There we go. Sometimes I don't scale at all because I think, hey, I've got it nailed, right? Like if I got that right there and I thought it could roll, I would sit on that, right? So to be clear, I'm always scaling because I don't know for a fact. Occasionally I get lucky and it just rips and I nail the break and I can just move my stop. It blows past what my scale would have been before I can ever enter it because sometimes 10 cents comes fast. And I just put the stop for the scale at 10 cents and trail it down, right? That's on occasion. We're not in that market because ranges have contracted and I'm not getting that setup. Secondly, I missed my short up here. I should have taken this. That was a perfect setup for a roll to the downside. I missed that. Third piece, kudos to Bill, who's been totally on process and is having the best month I think he's ever had if my memory serves. He is just on fire this month. And the reason why he's on fire is he's following process exactly. He's still struggling in some areas that he's working on, particularly with sizing up his trade, but he's doing the deal and he's doing it correctly. Okay. And I'm telling you, of all the guys I've coached through time, if you, whatever your process is, whether it's taking these zones or it's waiting for entry, exit, stop, which I think is far superior if you're trading leverage, using the fractals and the waves to figure out your trade plus the zones, your trading gets much, much better, right? But it doesn't matter which one you're doing. Just follow a process and keep repeating it forever. This thing should get kind of boring after a while, right? And then your P&L should follow. I haven't had anyone I've coached who's followed process who's blown up. I've had people who don't stay on process blow up, but no one who stayed on process. And as a matter of fact, I got another gentleman in the room, and Daniel sent me the message the other day, and he goes, it's pretty clear to me after several attempts, when I stay on process, I get paid. As soon as I go off process, I take a trading hit, right? In trading, your emotions betray you. Your ego betrays you. What you read on Twitter, stock twits, and everywhere else betrays you. Believe what you see. Trade the price action. Follow your process. Know what your max stop is on the day. And then know to walk away if you hit it. And know that sometimes the trade just isn't there at all. And you can't force it, right? It's kind of like being a surfer. It's a great analogy, right? I'm going surfing. There's no waves. Can't surf if there's no waves, right? So you've got to make the adjustment, and then when the wave comes, be prepared to take your trade. That being said, I have not been prepared to take shorts the last couple of days. I skipped my shorts on NQ. I skipped my shorts on CL, and I have not been relaxed enough into my trades. I don't know why. And what has me anxious specifically is I did not have the big first quarter that I wanted. And I rely on that first quarter being big so that I can press in the last quarter. And I've probably gotten worked up about it. I just need to relax and let the P&L go. It's really hard for me to press hard at the end of the year when I haven't built cushion at the beginning of the year. And I realized that after a lot of journaling. And so I will take my trade setups as they come, not trying to prove anything to anyone, and let the market roll whichever way it needs to roll. And that's my 2 cents about that. So at any rate, follow process is the message at the end of the day, nothing else. So anyways, that's my 2 cents. Let's get the chart set up. I should have one more chart here. Where is Mr. CL? There you are. So we'll keep CL tucked in our back pocket until the number comes. Let's move this over a little bit. Again, I'm always cautious. That's a short trigger right in front of the numbers, by the way. I don't trade prior to 9 o'clock. And CL sure looks like it wants to truck to 61, but hell, maybe I don't know what I'm talking about. It rolled down really nicely. This is normal PA. CL, see that setup right there? That is perfect, by the way. See that overnight? See how that push down stacked with 3 down on the wave, right? Fractal up, fractal down, speed bars, 3 down, all of that. If you only had one trade, you could trade, only one. That would be it. Fractal up, fractal down, 3 down or 3 up. Draw a line on top of that. Close above by more than 1 tick. So it wouldn't have been this bar. It'd actually be this bar over here. Long, right? Stop right there. You end up with a fractal trendline break and push. That is a picture perfect entry at 5:30 in the morning. That is what, if you could only trade one trade and this was it, it'd almost be impossible to lose money long term. There would be trades that would fail, but if you let those trailers run, that is a perfect setup. Just FYI, you should snap a picture of that for the guys who have the algo, right? Snap a picture of that 5:34 in the morning. That is picture perfect entry on that trade, right? And you can see it just simply didn't trigger short all the way up till just a second ago. And if you're shorting in front of the numbers, you're crazy anyway. So have fun. You might get it right. You might get crushed. Anyways, that's my 2 cents about that. And we'll go from there. See again, fractal up, fractal down. You didn't get the 3 up there, but that's a good short entry on that bar right here and roll down quite nicely. It's just right in front of the number. So we'll wait till they get done and let them do what they want to do. And again, the levels have been posted in the room, guys. What I'm going to do really quick is get those levels copied over here, and I'll work on that right now. So guys on YouTube, trade safely. If you'd like to visit the room, the email is posted on the description of the video. It's TRADENPERFORM, TRADENPERFORM. And no matter what you do or who you follow, make sure you have a process, or I really don't think you have a chance of survival on a day trading time frame, right? It just chews you up too quickly. It's too hard. So anyways, talk to y'all in a little bit. Any questions in the room? Okay, let's rock and roll, guys. Guys on YouTube, thanks for joining. Have a great day. We'll be back tomorrow.